1 year ago, I made a commitment. I said I wasn't going to judge ULTY after 1 month, or 3 months, or 6 months. I was going to hold it for a full year, reinvest every distribution, track every dividend, and let the numbers tell the story. Well, today is that day. And after 1 full year, I'm making a decision that might surprise you. So stay tuned. Welcome back to Simply Money. Over the last year, we've tracked ULTY together through bull markets, pullbacks, changing distributions, and tons of weekly dividend payments. I've shown you every update, good and bad. Today, we're closing the book on that experiment. We're going to look at total return, income generated, what happened to the share price, whether DRIP helped, and most importantly, would I invest in ULTY again if I were starting today? This isn't about proving anyone right or wrong. It's about following the data wherever it leads. Let's see what 1 full year actually taught us. Let's start out by looking at the spreadsheet. This is where I actually tracked everything. You can see my buys and then the dividend redistributions. Everything was dripped back into it. I did not take any cash out of ULTY. So back in July, we made the initial investment of about $5,000. And then we started, because we were selling off some of the SCHD and rebalancing some things, we put in a few more buys. We got our buy total up to about $21,500. So about $21,500 is what was actually in there. And I just want to come down and show you, as we look at some of this, the distributions. We'll start right here in August once we had our full buys in. And you can see the distributions. They were around $360 per week. It went up a little bit. There was a little bit of movement there for a while, but you can see the per share amount was steadily dropping. Because we were dripping and adding more shares, it maintained that weekly distribution for a while, but then they continued doing some tweaks. They changed their underlying holdings and they changed their methodology, hoping that would stabilize some things. And as you look down, you can continue to see that into October and November, the per share distribution began to drop even further, and our weekly distributions got down into the 270 range. You can just continue to see that distribution dropping over and over and over again. We're going to look at something else in a minute, so stay tuned as we're going to look at the drip, no drip, and 50% drip scenarios and see how, if I hadn't taken the distribution and reinvested it, would I have done better that way? And we're going to look at that here in a moment. But I just want to show you what actually happened as we continue to come down in 2026. Those per share distributions are just continuing to drop. And this is, remember, full drip. We have yet to take any of the cash, and you can see our distributions are getting smaller and smaller. I'm just going to scroll down here to the end. This last one ending in June here, we're looking at 270, 240, 270, 270 with these distributions in the 34 to 38 cent range. So overall in this year, it paid out about $14,500 in distributions that we reinvested. Because the share price was down almost 55%, the NAV erosion was greater than the distributions. And I've shown you on the drip score sheet. If you've not seen that, there's lots of videos on the channel that you can check out looking at the drip score. And sometimes if the NAV is going down, it's okay, because as long as the distributions are far outpacing that, you can still generate more income and make a total return that is strong. And that is our bottom line. That's what we're trying to do, is see what our total return is. And so at the end of the year, you can see our total right here, $757. Nothing big, nothing bad. And this isn't about bashing ULTY. I'm just going to redeploy my cash to make it work better for me. If you're still in ULTY, leave me a comment down below. Are you still in it? If so, why? What is your rationale? Everyone has a different reason. You can see our total growth was actually negative almost 3%. And that's with reinvesting. And we're going to look here in a minute to see if we had taken the cash. But we're going to be looking here in a moment. So let's just see, at the end of a year, basically letting that money sit there, it did no work for me. And I know a year is a short time in investing, and you could say, well, you need to hold it 5 or 10 years. And I agree with most funds, something like SCHD or the S&P 500. I'm going to hold 5, 10, 20 years. I'm going to ride out those lows and those drawdowns. But this has been in a very bullish market, and we're still down. Now, if we'd been in a bear market, if the market had been really pulled back and everything was down, I might reconsider if this was what the outcome was, because that would have been a nice hedge. If the S&P 500 is down 20% and I'm only down 3%, like SCHD did in 2022, I'm happy with that. It hedges for me. But this isn't a bull market and a very up market with these funds, and you're seeing it still down. That is where it becomes a little more concerning for me. So I want to look over here at our drip sheet, and what this is, and I just put in when we had bought in the full amount. So this isn't going to be exactly what I just showed you, is the exact fund when we bought, when we got distributions, those reinvested, and you could see the final outcome. What I did, just to simplify it here, I put in our final buy date here of August 12th, 2025, and our total buy-in amount of $21,650. And we're going to look at these scenarios if, okay, we dripped in real life, we actually dripped, and we saw that we were down 3% over the year. What if we had taken the cash? How would we have done? So I want to come down. You can see, again, it shows the share price starting here at $61. And as we come down to the end here right now, we're at $29. You can see that just NAV deteriorating fast. But if we had taken cash, we'll look at column F here, $357 would have been our first payment. We wouldn't have bought any more shares. We would have taken that cash. We could have used it for living expenses, whatever the case might be. How would our portfolio have done? And would we have gotten a positive return? Because as I've shown on the drip score sheet, and you can get that down below at Buy Me a Coffee, where you can see that there are times you can take cash and make a better return than if you drip. But was ULTY one of those? Let's look down here. If we continue, you can see what our weekly payments would have been. Each week, we would have been going from $357. Look at what we'd be at now. We'd only be getting $135 per week because our portfolio balance has been dropping. You can see that 21,500 is down to 10,300. And so you're getting a lower and lower amount because you have a lower and lower capital that it's being worked. So let's come down here and see what is the total return. Now with the full drip, and again, this is based off me putting everything in August instead of the couple little buys that I did. So it's off a little bit from the actual what we did, but it's pretty close. You can see the overall full drip would have been a negative 7.5% return. If we had taken the cash, yes, we would have got $9,626 in cash, but our balance would be down $11,279. We're still down $2,000 by taking the cash. And that's where people oftentimes are looking at this saying, well, look, I'm getting this cash flow, but you're still total return down 7.63%. So would I do this again? No. That's my opinion. For whatever it's worth. I'm not telling you to not buy ULTY. I did this. I told you it was an experiment. We've been doing updates for the last year, and I continue to tell you this was just an experiment. I was not encouraging you to get into ULTY or not get into ULTY, but I wanted to give you the final update and show you a couple things because I want my cash working for me. It's done its job for you guys to show this, to demonstrate it, but I need to put my cash to work for me. I want it pulling in some income and building some capital. This will be redeployed into my income portfolio. You can check out updates. I do those every month. You can see that on the channel as well. But I'm going to be redeploying this capital into some other funds that you'll begin to see on those updates. We're going to be adding some to OVL. EGI is going to be in there. AMDW and GOOW will be the 4 new positions. This will get deployed in there, and then some will be going to other places as well, just in the income, and even some actually back into the growth fund. I had a couple opportunities. I want to make sure I take advantage of those. This will be the last update you'll see on ULTY. What are your thoughts on that? Give me some feedback as you've followed the channel. If you're new to the channel and you've never seen this, I hope this is helpful. Give me your thoughts on ULTY and what you've seen from my year experiment. But if you have seen it before and you've been following it, are you surprised that I stayed with it for the full year? If so, give me a thumbs up. It was tough. There's a couple times I thought about pulling the plug a little bit sooner, but I did it, and that's where we're at. I appreciate you joining me. I hope you like these videos. We'll be doing some more with updates of my actual portfolio. And give me your opinion on different funds you want to see these back tests on. Even though I don't actually own them, we can still do these back tests on various funds to see, would it have done better to drip it, not drip it, maybe do a 50-50. These sheets are available, and you can come over here. You can put the date you buy and the amount you bought, and then you can put in, maybe you don't want to drip 50%, maybe you only want to drip 40%, or perhaps you want to take $400 cash, regardless of what the income is. And if it's less, then you have to sell some shares. If it's more, then you reinvest the rest, and you can see what that would do in those scenarios. So it's good for, like, if you're planning on using the income, but you only want a certain dollar amount, to see what that impact would have been over the year or 5 years, depending on the various funds. So that is it for today. Thank you for joining me. We'll see you next time on Simply Money.